We are ready to go with our next session. And this is Technology and Business Evolution. Remember, you are all encouraged to engage with our panelists and our host by using the Q&A and chat functions on the webinar. And let me turn it over to Dushan, who will introduce himself and his panelists he'll be joined with today.
Thank you, Kevin, and welcome everyone to the Technology in Business Evolution session of the Drake Risk and Opportunity Forum. My name is Dusan Stojanovic. I have roughly 25 years of banking industry experience, most recently with the Federal Home Loan Bank of Des Moines, where I served as Chief Risk Officer and Chief Operating Officer. And prior to that, I was a bank regulator in various capacities with the Federal Reserve System. All right, well, as I already mentioned, the topic of our session today is technology in business evolution. Let me start us off with a social media post from a few days ago. I'm going to hold it up, my only prop today, by one of today's business thought leaders. It's a cartoon under the heading "Safe is Risky," which has an executive addressing his team as follows. Instead of risking anything new, let's play it safe by continuing our slow decline into obsolescence. Well, the lesson is, of course, clear and well known. Rapid technological change continues to present businesses with risk opportunity trade-offs, and playing it safe is no longer an option. As, by the way, our keynote speaker, Chang Kamui, noted earlier when he invoked a certain company called Kodak, which many of us of a certain age remember very well, but most of the Gen Zs and millennials, I guess, have to Google and read about on Wikipedia. So with that said, to help us flesh out how technological change can impact the strategic direction of organizations, we have with us today business leaders from two very different industries, interactive entertainment, or video gaming, as most of us know it, and financial services providers, most specifically, in this case, providers of technological solutions to life and annuity insurance companies. So let's begin with Jeff Brown, who served as a senior executive for Activision Blizzard from 2010 through this year. Activision Blizzard is a member of the S&P 500 and arguably the world's most successful standalone interactive entertainment company. So Jeff, in addition to expanding on your own background, please give us an overview of Activision Blizzard to start us with, its evolution in the gaming space, maybe including the move into mobile gaming, acquisition of Candy Crush, how it all came about, the risks and opportunities involved, etc.
Sure. Thanks, Dusan, and it's great to be with everybody today. I hope you can all see and hear me okay. Somehow appropriately for a technology panel, about 15 minutes ago, Microsoft pushed the patch to my computer, so it went out of things, so I'm on my phone. But hopefully you can all see and hear me okay. As Dusan mentioned, I probably come from a little bit different background than many of the speakers that you'll hear today. I'm a practicing lawyer, spent a number of years at a big firm in Chicago doing securities and M&A and public finance. And from there went and for over a decade handled corporate governance and securities for Motorola. And then a little over a decade ago, got wooed out to the West Coast, and I have spent the last decade at Activision, where I had a number of roles. I was the secretary of the company, was the company's chief compliance officer, and in addition to oversight of the law department, spent times overseeing the company's information security, physical security, facilities insurance, some sort of non-legal sorts of things. And so in the roles I've had, whether it was as a attorney trying to take companies public or otherwise, at Motorola, at Activision, I've advised a number of companies that were in that, continuously evolve or quickly become obsolete sort of realm, and have certainly seen some who have done that well and others who did not. continue to evolve, and it created problems for them. So very consistent with what Dusan mentioned in the quote. I've been at a place where we recognize the importance of continuously evolving. If I focus on my most recent company, Activision Blizzard, some of you may not have heard of the company. I would almost guarantee you that your kids have. And many of you have likely heard of our games, Call of Duty, World of Warcraft, Dusan mentioned Candy Crush, just to name a few of them. And Activision's story is really one that demonstrates the trajectory of a company that's been willing to take big innovation risks. And by doing so, it's been able to remain a leader in an industry that has been rapidly growing over the past 20 years. 30 years ago, Activision was started by a bunch of engineers from Atari who just got tired of worrying about the hardware side of things and just wanted to go make fun games they liked. Their early years were, they were dynamic, but they were rocky. They were great game makers, maybe not as great a businessmen, but more so the whole industry was still very nascent. Things hadn't played out at all. And then the company was bought out of near bankruptcy by a guy from his undergraduate dorm at Michigan. And he is still the CEO of the company today. And, in the early, in the 90s, the company sort of had to bet it all on every game that they made. It's hard to believe today that, if a computer game named Return to Zork hadn't hit it big, there never would have been a Call of Duty or any of the other things that have come from Activision. But what we can really see at Activision, what I think talks to the topic of the panel today, is that there was a constant recognition that the world was moving, the industry was moving, and there are some very thoughtful but big bets that the company has made over time that have resulted in it maintaining very explosive growth. If you go back to the turn of the century, at that time, tiny little company chugging along. And then they simultaneously created a new game engine and recognized the kind of booming popularity of skateboarding and the Tony Hawk series of skateboard games that some of us are probably old enough to remember was born. And that was kind of a jump step for the company. And suddenly it was a $500 million company. And then there was an innovation of Guitar Hero, which again, some of us may remember. And the idea of being able to play a peripheral and see things on screen and feel like you were part of a rock band was the next jump step. And now all of a sudden it was a $1 billion company. And then Call of Duty took off and it was a $5 billion company. And so with all of those, the company was kind of riding high into the mid 2000s, but was smart enough to recognize at that point that, hey, all of our strength is in console games. And I guess just to pause there when I say that, when I say console games, I mean the ones that you play on your Xbox or your PlayStation or your Nintendo Wii. And so the company was incredibly strong in that space, but didn't really have anything strong in the PC space. And so that was the first of the real transformative acquisitions the company made. Went and acquired what was the most revered name in PC gaming, Blizzard Entertainment. And with it, World of Warcraft, which was far and away the #1 PC game, a massive multiplayer online role-playing game. And so now all of a sudden the company jumps up to, the next level. We'll call it a $10 billion company. And again, things are going great with kind of great execution and with continuing innovation. New games like Skylanders, which you may all remember buying for your kids at one point in time. Again, a huge innovation with the kind of magic of being able to, take a physical toy and set it on a portal and now suddenly see that toy and play that toy in a game. So great innovation. But at the same time, the company recognized that, listen, all the explosive growth in gaming was now moving to mobile, that device that was in everybody's hand all the time. And so recognizing that in 2016, we went and acquired King, which was one of the most respected studios in mobile gaming and had what was the #1 title in mobile gaming, Candy Crush. And so what you now had was a company that had been able to, by making bets, by constantly innovating, was very balanced in all three of the delivery platforms there are for games. Consoles, where you've got Call of Duty, Skylanders, PC, where you've got World of Warcraft, Diablo, and then mobile games, where you've got Candy Crush and a host of others. And so you had a company that once was very revenue dependent on a single source, in many ways on just a game or two, that was able to diversify. And now, here we are today, 5 years after the King acquisition, and it's about a $70 billion company. And none of that would have happened if the company hadn't continued to evolve. We had to evolve the way we made games. We had to evolve the way we marketed games, continue to evolve the way we deliver games. And over the decade I was at Activision, with the roles I had, I sat in every board meeting, I sat in every board committee meeting. And what management and the board recognized was the greatest risk was to not always be looking ahead. In many industries, particularly in the gaming industry, even if you have the greatest franchise, if you don't continue to innovate within it, it'll cease to be that quickly. If you don't recognize the next thing coming, whether that's a move to mobile, like I talked about, whether it's a difference in the expectation consumers have for how frequently content's delivered, any of those things, if you don't recognize that, it's very easy to quickly go from being #1 to being in the pack and having to fight very, very hard just to get back. And so what we were always thinking about was, how is the world evolving? How is the industry evolving? And recognizing that really the greatest risk was to not go try and do new things. So again, if I just circle back to what Dusan said, the way we managed Activision was that being safe may be the biggest risk of them all. And that doesn't mean a company should go take crazy risks. They should be thoughtful. They should be calculated. Certainly doesn't mean that a company should go take every kind of risk at once. I think for us, we always thought of ourselves as taking very major innovation risks, making big bets on a game, but we always kept a very, very strong balance sheet. We didn't overspend in our acquisitions. And our liquidity was frankly a major strength for us, and a competitive advantage for us in our industry. But the key is we were always striving to find what's next. And if you're in an industry of innovation, which these days, I think even industries that folks don't think of as industries of innovation, they are. That if you don't constantly look for that, it's sort of an evolve or die mentality. So, Dusan, let me turn that back to you.
Thank you, Jeff. That was a very good overview. And as I said, it connects very, very well to the session that we have with our keynote speaker. So now let's turn to our other speakers, as I mentioned, from, again, a very, very different industry. Brett Williams and Sovan Srivastava are co-founders of Benekiva, a configurable SaaS technology platform providing customer solutions for life and annuity insurance companies. So Brent and Sovan, please expand on your backgrounds and give us an overview of how Benekiva came to be. And also, what pivots have you had to make over time, and which risks prompted you to make those pivots? And maybe also touch on any new business opportunities that you see ahead, such as maybe moving beyond the life insurance business into P&C.
Sure. Yeah, thanks, sir. Thanks for the introduction. We're happy to be here. I do have Sovan Srivastava, our co-founder and CTO, with us today, just in case there were some questions that came about. And it's kind of a cool story because Sovan is actually a graduate of Drake. So I thought it would be nice to get him back into the mix of Drake. And so we're certainly happy to be here. But I can expand on the Benekiva. First of all, we always get the question of where did the name come from? While we're not a $70 billion company, yet. We certainly are trudging towards that. But Bene Kiva, the actual name actually means something. Kiva actually means sacred chamber for all, and Bene was short for beneficiaries. So essentially what we designed and built was a claims and servicing platform to service the insurance industry around claims and servicing. The struggle we had was prior to Bene Kiva, I was an investment financial advisor for many years and built a very substantial practice in that business. And the struggle I had as an advisor was, on one hand, when we would go through claims and customer servicing processes, I was constantly apologizing for the archaic process, apologizing for having to redo this form and resubmit that form, and just the overall process. While on the other hand, I was trying to maintain or gain these folks as clients. And a shift in our industry occurred where all of a sudden customer experience started to become more focused on in our industry. And upon that realm, you know, Amazon was coming out and people were expecting to be able to do everything with their mobile phone. They were expecting, you know, to be able to go to Amazon and have that Amazon type experience where they could click a button and 2 days later, you know, it's at their doorstep. When you start to engage in technologies like that, all of a sudden, from an experience perspective, you start to expect everything to be the Amazon type experience. And where the opportunity came was, you know, we didn't see any of that Amazon type claims experience within the insurance industry. So what we decided to do, we certainly didn't go build Bene Kiva right out of the gate. We decided to do some research and identify, was this an industry-wide problem or was this a carrier-specific problem? And if it was an industry-wide problem, what type of technology would we have to build in order to solve the experience issue for 3 sets of individuals within the claims process? The first set, obviously, the policyholders and beneficiaries. You have to give them that Amazon type experience. They want to be able to do all of the carrier's claims and servicing and, quite honestly, new business operations anywhere, anytime, any device. And they want to be able to do that at 2 a.m. if they choose. And there, at the time, there wasn't anything out there that would provide that. The second set of individuals we wanted to make sure that we helped was the previous folks talked about legacy systems within the carriers as being a huge opportunity. Well, when you think about legacy systems within a carrier organization, you're actually talking about a human being sitting in front of a specific terminal in order to do their job, right? Because their legacy technology doesn't put them in a position to be able to do their claims work and their servicing work anywhere, anytime, any device. So that was the second set of individuals we wanted to solve the experience for. And then finally, the third set of individuals was any third parties or agents, advisors that were part of the claims and servicing processes. We need to give them that anywhere, anytime, any device. So we did this research for about 3 years, and we identified that it was an industry-wide problem. But what was interesting was, you know, we talk about risk and opportunity. What was interesting is I can't tell you how many people told us not to build a claim system. I mean, it was countless people said, do not build a claim system. It's an expense on the balance sheet. Insurance carriers aren't going to pay for expense on the balance sheet. It's there, you know, the list went on and on and on. But we had 3 years of data that said, if we build it, you know, we're in Iowa, right? Field of Dreams. If we build it, they will come. And so we took that huge risk of putting together a team and going into what I call our silent ninja phase of actually building the platform. So fast forward to 2018, we launched the platform in the middle of 2018 with 1 carrier client, quickly got traction right out of the gate and got 3 carrier clients within 9 months. Within 9 months after that, had 6. And today we're working with about 16 carrier clients, and 6 of those are tier 1s, so the largest carriers in the world. So it certainly proved to be a situation where those people that told us many, many times not to build this system, all of a sudden now are saying, gosh, you guys are geniuses. You saw the future. You built this system, right? So it's interesting when you think about risk and opportunity. To me, like one of the panelists said, about InsurTechs, they're both risk and opportunity. And I would certainly agree. They are risk, but they're also opportunity. It's about identifying how much potential risk are you willing to take advantage of the potential upside of the opportunities. And, as Jeff mentioned, Activision had to go through that same thought process. How much risk are we willing to take to jump into another sector, but at the end of the day, you've got to take some of those risks in order to realize the opportunity and the returns of those opportunities. That help?
Yes, that helps very much. Thank you. Let's look more specifically and staying with you guys into the mode of client customer value delivery and its evolution with technology. From my own experience, one of the big pain points for any organization that utilizes non-homegrown technology solutions is the upgrade cycle.
Mm-hmm.
Software needs to be upgraded, and depending on the customization and integration with other in-house software, upgrades can be multi-week, sometimes multi-month projects, and they occupy a lot of internal resources, and they're fraught with pitfalls of unsuccessful rollouts. So how has Benekiva addressed this issue, and how is your solution different and better?
Yeah, it's a great question. I defer back to the research. That was one of the items that we identified as research was a couple different things. One, the failed implementations or extended time it takes to install a vendor's product or service. We often talk here at Benekiva. We don't talk about implementations in years. We talk about implementations in months and even weeks. But we can't do that without the proprietary software that we created. So Soven and his team put together what we call the Configurator and Innovation Gateway. What that allows us to do is typically if a vendor comes to an organization today, that vendor says, hey, thank you for the opportunity of working with us. Thank you for choosing us and our platform. In order to implement it, we need 18 months to 3 years. And we need this data, we need it out of these systems, and we need it in this specific schema. Oh, and by the way, we need you to follow this specific connection point to connect the two softwares or to connect the softwares, the multiple softwares. And that was where we identified an opportunity within the industry. And so what we said was we need to basically flip that whole thing on its head and say, what if we went to a carrier and said, we'll get you installed and implemented within 6 months, because we haven't had a single implementation take longer than that. And we don't care how you give us the data, just give us the data. And by the way, you don't have to build any new connection points. Let us look at what you already have. And that right there, the only way you can do that is you got to have the technology on our side to be able to facilitate or handle that. So Soven, the one right here, he's what we call the wizard, the Oz behind the curtain. He identified this as a huge risk from a technological perspective and a risk for us from a business perspective, because we couldn't go out in the market and compete with current systems in the market. Because don't get me wrong, there are other claim systems in the market. We couldn't go compete with them and offer up the same installation timeframes. So Soven, expand on that.
So one of the things that, or the challenge that we've encountered was obviously the insurance companies or the carriers of different sizes, and within that carriers we have products. Even if you're talking about the same product, they're actually offered, or the claims process is happening in a different way, like even it's subdivided into products and, and then the claim systems and legacy, maybe the few different systems out there that we have no idea how that all works. So the challenge was for us to really get into that quickly, offer a solution that doesn't take, more than few weeks, months, and make it really, the other thing was to do with the data itself. So for us to prove that out, we had to create something called, like a mock data, mimicking the exact behavior of what it would be for the entire claim life cycle to go on from soup to nuts, like from start to finish, how they all go, but in a way that's that talks exactly like how the system would be. So if they are using legacy systems, how the data would come, how they connect to us, as a insurtech startup, like, how that works with us, and then how easy they will feel and cross those compliance that we have to go through. So for all of that, we took that phase, that silent in the phase where we actually created this configurator innovation gateway. And we basically said that we will, when we talk to the IT counterparts on the other side, we are going to listen to them and work with them with the solutions that they have at hand, without requiring them to create something new, because they may already be working with, we just assume that they may be working with another vendors out there, and they're providing certain software, certain applications, certain ways, and we don't want anything to change on that. We just want to rely on that, make sure it works, so it doesn't add up to their budget, to their IT budget, to pool the resources and put that all together. So that was our premise of how we all started, and from the technology wise. And now we are at a point where we just when we go into them, we say, like, you have a one of the things that you mentioned, like, how we scale that into a PNC market or other, we're at a point that we basically said that's not a problem. If you have a use case that we can just incorporate with our existing mock data infrastructure, we will be readily be able to do that, show you what we got in a matter of weeks. That makes it easier for you to decide and come up with a conclusion instead of waiting or even experimenting anything.
And with that said, that was a huge risk, right? From an insurtech startup, you got to remember, we did all this work without $1 coming into the organization, right? So it's a huge risk to say, okay, this is the mammoth system we're going to build. Our system today, I often tell folks, if you truly want to see the Benekiva system, we need you for 2 days, not 2 hours. We need you for 2 days, because it's such a mammoth system now. But we had to take a huge risk in order to build the technology to put us in a position to be able to go to a carrier and say, hey, we'll get you up and running live in production in less than 6 months. And we're willing to put our money where our mouth is. Because one of the other questions you asked was, how are we different? Well, we're different in a couple ways. One, we can get them live in production very quickly. 2, we don't charge any software as a service fees, basically use of our platform, until it's live in production. That is 100% the opposite of what's current in the insurance industry today. When you buy a vendor platform today, you pay that year subscription fee, whether you're using that platform or not. That's just the way they've always priced it. And we said, wait a minute, they shouldn't be paying for software as a service fees on a platform that isn't implemented that they can use. So we don't charge it until they go live in production, which is an incentive for us to get them live in production faster. So we don't talk about 3-year timeframes. We talk about less than 6 months, right? The second thing we did differently is, there's a lot of folks out there with these smartphones, right? Well, one of the reasons we have what we call Apple model pricing. And the reason we have that is we want to make sure that when new enhancements come out, new features and benefits of the platform, our carrier clients don't pay for those. They get a monthly list of the new features and benefits. Our customer success team does an analysis of what features and benefits will fit that carrier. And then we go explain those features and benefits. But at the end of the day, it's up to the carrier to accept whether they want those features and benefits. But what that allows us on our end is, you mentioned, Dusan, versioning, right? We don't have version issues because of the 16 carriers we're working with. We don't have a single carrier with custom code. So we don't go to a carrier and say, hey, by the way, when we get done installing this platform, we released our next version. We need to start working on upgrading that to that next version. The reason we don't have that today is because, back to the research, that was one of the things the carriers told us pained them so much. So I think one of the real important portions that folks need to know and understand is, there's a lot of great technologies out there. But if you look at a majority of them were, we build a great technology, then we go look for a problem to solve with it, right? We didn't do that. We said, let's identify the very specific pinpoint problems we want to solve in this industry, and then let's build the technology to solve those problems.
Hey, well, thank you. That explains a lot, and it sort of sounds like a move towards probably what most businesses are going to start expecting in the future, which is seamless updates and upgrades behind the scene, such that the company is not perturbed by these cycles that come pretty often.
We believe that's the case.
Yep. Yeah. So before we turn it back to Jeff and Activision, I just want to remind everyone that at the bottom of your screen you can click on Q&A and pose any questions for our panelists. We'll leave definitely some time towards the end for that. Well, turning to Jeff, what about Activision Blizzard in the same space? How has Activision navigated the evolution of the mode of delivery of its product? You mentioned some of that in your introductory notes, from physical discs to software downloads to streaming, subscription gaming, etc.
Sure. Thanks, Dusan. Yeah, so as I alluded to earlier, evolution in the video gaming industry is incredibly rapid. And certainly the ways in which games are made and delivered and marketed are prime examples of that. When I joined Activision back in 2010, over 80% of our sales then were through what I think of as traditional retail channels. So when the annual Call of Duty game was going to come out right about this time of year, people would go line up at their local GameStop or their local Walmart, and they'd wait till 12:01. It was like a movie premiere. And then people would have reserved their copy. They'd rush in, they'd get it, they'd rush home with their disc, they'd put it into their Xbox, and then they'd play it till all hours of the morning, either with their friends or so they could tell their friends the next morning how cool they were. And that was the primary mode of delivery for what I would call frontline console and PC games. So for us, that was Call of Duty, it was Skylanders, it was World of Warcraft when it came out with its newest version. And back then, for the smaller group of folks who said, hey, I don't want to have to go to the store, I don't want a disc, I want to digitally download the game, there were some of those, but it could take many, many hours to download a new frontline game. And frankly, for some games, they were simply so big that the pipe couldn't handle it. And that was a pipe then that couldn't handle maybe a new game that was 15 gigabytes to download. And when I think back, what's now a decade ago, one of the really great strengths and competitive advantages that Activision had was our retail execution and a really, really great retail sales force. So we were always able to go get the most prized shelf space and a lot of it at the biggest, the most important retailers all around the world. And we were able to do co-marketing with those retailers because people coming in to get our games was an incredible way for them to drive foot traffic, particularly in the holiday season and otherwise. And we were able to do retail bundling with the hardware manufacturers, the Sonys, the Nintendos, because if they were going to come out with a new console, when it went from the PlayStation 3 to the PlayStation 4, people don't buy the new console just because it's cool to look at on the shelf. That's the razor, and what we make is the blade. And so there, as you can imagine, there's a lot of competition, good for us, between Sony or Microsoft to maybe be the ones that could get initial access to our games. Activision has always been very, very platform agnostic. We want to build a game that the most people can play wherever they play it. But for the folks who are building hardware, even if they can go to folks and say, hey, you're going to be able to get Call of Duty a week earlier than other people, or if you come by my new thing, we're going to throw in this great game. That made a big difference. But those were days that I think of as a more traditional retail model. So now fast forward a decade, or probably only got to fast forward 8 years from then, because this has been going on, increasingly over the decade. And now the retail versus digital delivery percentages have literally flipped. So now digital sales represent well over 80% of the company's revenues. And now, instead of waiting in line at retail stores for that magic moment to get the discs, folks go onto their Microsoft account or go onto their Sony or Nintendo account, and they pre-download the item. And then at 12:01 a.m., everything drops and boom, they can play right away. So, don't get me wrong, there's still some folks out there who love the feel of that disc and like to be able to put up, the 15th year of a Call of Duty game on the shelf next to the other 14. But the number of retail sales continues to drop. And I think the other thing really significantly now, again, just compared to a decade ago, the most recent Call of Duty game was about 200 gigabytes. I mean, it's huge. And now installing those digitally is something that can be done relatively smoothly, relatively efficiently. And so just with the technology that is, increased download speeds and bandwidth in everyone's homes, it's made that delivery easier. And as a company, it was important we recognized that was coming. For us, that we started to change not just physical infrastructure in terms of the way games were made, because frankly, when the game's made, the difference between sending it off to be pressed to a disc or getting it ready to be delivered digitally, not enormous differences, certainly differences. But I think even more is it really changed the nature of how you market games and who your really, really key partners are making games. If you look a decade ago, what was really key, it was the great relationships with GameStop or Walmart or Best Buy, or if I really want to be a decade ago, Toys R Us. And today, again, not that those aren't still important partners for the company, but now the bulk of it is going through Microsoft, through Sony, through Nintendo, who interestingly are all companies that are hardware manufacturers, but also have their own software businesses. So they are both partners and competitors, which can make things very, very interesting. And then, of course, what I haven't even talked about yet that has changed all of that infrastructure is mobile games. And there you're not talking about just a different delivery method, but you are talking about a completely different set of distribution partners, tiny little companies named Apple and Google. And you're talking about a completely different monetization mechanic, as most of you probably know from, when you're waiting at the airport or, waiting to pick the kids up from school, play a game on your phone. Almost every mobile game that's out there is free to download. So very, very different monetization model. The only way that you make money from a mobile game is through in-game purchases. So that's, character personalization or buying more time or free turns. Or if you're paying Candy Crush, it's to buy a lollipop hammer, gold bars, or things like that. So that has completely changed the way games are marketed. In the old days, the way people thought about buying a video game is you went to the store, you plopped down $59.99 if it was a brand new frontline release. You took it home, and then you had that content, usually a kind of a story mode and then a multiplayer mode where you could go play against other people. And you had that content forever, kind of a one-time spend up front. And frankly, if you look at the amount spent per hours played, a pretty darn good entertainment deal compared to, going to the movies or going to a concert or a baseball game. Now with mobile, there's no payment up front. And it becomes vital if you're going to have revenue streams from those games that you're constantly refreshing that content, things to keep people engaged, to keep them wanting to come back. And when they come back, hopefully them deciding that they want to spend 99 cents for some extra plays or $2.99 to make their character have cool purple hair or whatever it is they want to do. But so it's in addition to changing, not just the distribution model, it changed the entire revenue monetization model. And it changes the way you think about games, not even just mobile games. Today, if you look at console games or PC games, consumers expect that they'll buy the frontline game, but then, at least once a quarter, sometimes once a month, sometimes even in a tighter time frame than that, they expect more downloadable content to become available. So things constantly refresh and there's constantly new content in the game. So all of that, if I look at just, within the last decade, has completely changed kind of from the delivery model to the revenue model to, quite frankly, the production model. And so what did we have to do to evolve with that? Probably the biggest thing, and again, thankfully, something the company saw coming, we had to really change the nature of our marketing teams to go from more traditional retail-based, marketing model where the relationships with the key retailers and advertising through more, I'll call it traditional means, a big advertisement during the NBA finals or, wrapping Times Square in enormous, Call of Duty banners, things like that, or putting a flyer in the Black Friday newspaper. You think of those types of advertising. And instead, we now had to move to a very digitally savvy marketing crowd, a world where you're much more focused on your direct one-on-one contact with consumers, where you're doing more targeted digital marketing, where things like social media buzz can really, really matter. So don't get me wrong, the company still does some of those big advertising things. Quite frankly, if any of you have been watching TV lately, the new Call of Duty game comes out in about 6 days, so you've probably seen an ad or two. But what really needed to change was sort of where the consumer lived, for want of a better thing. And so we really had to focus on not just the games, but the way we were getting them to people and the way we were letting people know they were coming. Okay.
Thank you, Jeff. Before we turn to some questions from the audience, my last question is the unavoidable one when it comes to technological change in the digital age, and that's information security, which is, of course, paramount in this age of hackers and malware, ransomware, etc. But it's also critical to building customer and client trust. So we've had a chance to hear from cybersecurity experts earlier in a very informative session. Now let's get some top of the house perspective. So Brent and Sovan, your company handles sensitive personal data, PII. How do you keep it secure? And what have you learned from working with confidential data to improve your processes? And what do you see coming in the future?
Yeah, it's a great question, and Sylvan will jump in after I give my dumb answer. But security is often one of the challenges for any insurtech, or quite honestly any vendor working with carriers, because you're right, they do have some very sensitive data. I mean, let's think about it. I mean, carriers have our names, our social security numbers, basically just about any type of data that they have at their disposal, our medical history. So when you start talking about an insurance carrier who has all of this very sensitive data, talking to an outside vendor who needs a portion of that very sensitive data in order to do the work that we want to do. So for example, we're the claims process. So we need some of that data in order for us to process the claim on behalf of the carrier. And we need this to be a very cohesive process between the carrier and, in our case, Benekiva. We often say that if Benekiva does its job correct, no one knows we're involved, which to this day is a reason why we don't do press releases of all of our carriers. Because on one hand, I can't tell a carrier, if we do our jobs, no one knows we're involved, and then turn around on the other side and say, by the way, will you do a press release with me? I mean, it just didn't sit right with us. But as an insurtech startup, there's a couple things that I would suggest from a carrier perspective is, a lot of these carriers that we deal with are 100-plus-year-old companies, and they still do their vendor procurement process like they did 100+ years ago, with the exception of maybe looking at some of these enhanced security measures. So there's a couple things. While one on our side, and Sylvan will talk about security here in just a second. While on our side, we have to be, a very secure platform. We have to go through external audits to make sure we're SOC 1, SOC 2, all of the fun security protocols that we have to have in place, and policies and procedures. But on the flip side of that, when a carrier wants to work with a smaller company like a Benekiva, or some of the others that were on the panel earlier, you simply can't run a company like Benekiva through a procurement process, that very same exact procurement process that you would run an Amazon through. I mean, we just don't have the resources to be able to do a process like that. So I think a couple things have to occur. One, we as the vendor have to know and understand the regulatory constraints and requirements that they have, and make sure that from a security perspective, we can do business with them. That's number one. But then on the flip side of that, these carriers that are 100+ years old need to maybe look at some of their internal processes and say, gosh, do we really need to go through this really stringent process and run this small company through the same process that we would an Amazon or a Google or someone like that? So I'm not saying you have to take all of the security risk portion piece away from the vendor procurement process. I'm certainly not saying that. But what I'm saying is this is an opportunity. If you want the opportunity to work with insurtech companies like ours, this is the opportunity for the carrier to maybe refine some of their current procurement processes. And as long as you're working with a vendor that knows and understands your regulatory constraints, things like that, then there should be a way to create a win-win scenario from a procurement process between a large carrier and a small company. Where a lot of insurtech struggle is they don't have that industry knowledge and knowing, the industry specific rules, regulations, and constraints that these carriers have. So oftentimes they go in our opinion, unprepared to be able to deal with some of even the basic security questions, let alone, going through SOC type audits. So Sylvan,
Yeah, from the security standpoint, I think one of the things that the early on, what we realized was that, we'll always be the cloud first, this is our structure, that's how we're set up. But if there is a need, we should be flexible enough to actually give our solution or have it run through the carriers, DMG, their infrastructure, their team involved in that process. So even though this is our solution and our products, and from the security standpoint, we should be able. And the other thing is, like, in case of a breach, our data should be encrypted down to the line where if you from the PII perspective, if you define that here are all my data, my social security number, my maybe EID number, or any other deemed security, like name and insured name and policy number, all those data that's defined, we should be able to get to the point where if this data was breached, nobody can read that, nobody can get it. So how can we secure that? What's the industry best practices out there? What can we do to win that confidence from the carriers, like when they are auditing us or when they are looking at this data? If there is, because we not only with the data part, we also have the digital e-signature solutions in our solutions that we provide. So all of that combined, is there a physical file stored? I mean, how are they stored? Are they, like all those things at rest or at transit, HIPAA compliancy, every other SOC 1, SOC 2, anything that comes along, that's the mindset we went into. Is like, we need to be prepared as if like every client is a tier 1 client, and every process of our security process is that strictest, that everything they need, as if like, if this was to be hacked or this software were to be found by somebody, will they be able to use it? Is there a encryption key that's protecting us or not? So.
Okay. All right. Well, thank you, Sovan and Brent. Jeff, I would imagine that for an interactive entertainment company, there are a lot of challenges also relating to information security, not just the traditional ones, which we just heard about, PII and others, but also the importance of maintaining integrity in the games themselves. Can you talk a little bit about how you saw these risks evolve during your decade at Activision Blizzard, and how did the company address those risks? Jeff, would you mind turning your undoing your mute? Thanks.
Hey, there we go. Sorry.
Yeah.
Thanks, Dusan. And I'll go quickly because I certainly want to make sure and leave time in case folks have questions that we can address. So as you would imagine, at a company like Activision Blizzard, we have all the challenges that any multinational company would have with employees located, all over the world. We have 30 different studios spread across the US and Europe and Asia and such. And also, I think some of the challenges that come with being a company that's made up of what once upon a time were 3 separate companies, Activision and Blizzard and King, who each have their own, cultures, but, kind of infrastructure, had their own way of doing things. And so if I was going to, sort of say a real high level, I would say that, what we learned were really 2 things are vital. One is to have a good coordinated approach. That doesn't mean the same approach, in every studio for every game, because games are different, geographies are different, but a coordinated approach. And then the other thing is what I would just call constant vigilance to, I think of information security like painting the Golden Gate Bridge. When you think you're done, go back to the other side and start over again. And, we had added things in the sense of, China is a very big market for us, both in terms of end users and in terms of, we have some studios there that make things. In China, you can only market a game by working with a Chinese partner. So there's a big company, Tencent, NetEase, that Activision Blizzard works with. And so as you can imagine, in that front, there are unique things that come with how you're going to look at dealing with information security and such. If I divide it into 2 things, the folks that are making the games, so the folks that are at the studios, are constantly monitoring, watching for cheaters, which is a big thing for us, people that will go build a bot to shoot their gun for them, or, do other sorts of things to give them an unfair advantage in the game. For traditional hackers, things like that. It's really table stakes for us that the games maintain their integrity. And so if we see someone cheating, that they get banned. Might be temporarily with a warning that says, hey, you're kicked out for 5 days. If we ever see this again, it's going to get worse. Or it might be somebody that gets permanently banned because they've done it too many times. And so there are significant resources devoted to that in the game space. And as you might imagine, other players help too. If somebody sees somebody doing something they think is cheating, they let us know. It's an interesting thing for us. And back during the years when I was overseeing information security, it was fascinating to me. Some of the very, very best hackers in the world spend a lot of time playing our games, and they like them a lot. And so on the one hand, those folks don't want to bring the game to a halt. They don't want to go do a DDoS attack and not be able to go play Call of Duty that night. But it can be a great notch on their belt if they can somehow, hack in and, leave their name somewhere to show all their buddies. So it's this very interesting thing in that in some ways that community protects our games because they want to be able to play them and they care about them. I will also say that when we were really building up our information security team, I was, not above somebody out there who did hack into a game that was, they were sitting in their parents' basement and, some 19-year-old kid hacked in and we're like, wow, he's really, really smart. We weren't afraid to go turn a black hat into a white hat. Wouldn't say that's something we really advertise, but it's something that's out there. So, if I look 10 years ago at Activision, the studios were doing really, really great stuff for the games, those sorts of things. But what was kind of lacking was what I thought of as a dedicated central team for the company. It was sort of like everybody in IT thought of, information security is part of what we need to do. But there weren't folks, again, a decade ago, and that seems like forever ago, that was their sole job. And, I remember shortly after I started talking to our audit committee about it, and as will, those of you that deal with audit committees, as often happens, they said, you're right, go build it. That's how I ended up overseeing information security for a while. But what we did is bring in folks who, from a corporate standpoint, could really build and have a systematic approach to how we were going to protect everything, the games, the crown jewels. Activision is an IP company. That's it. Everything is about the IP. And so it was about having that team that's constantly focused on it. And that is, constantly getting to the end and starting over again and just being constantly, vigilant. And today, that's a team that, in addition to the enormous resources, the studio's a central team that's 50 plus people that's coordinating that overall approach for the entire company.
Okay. Well, thank you, Jeff. We're nearing the end of our time, but we do have time for one question. And let me see here. This is for Brenton Sovin. What advice do you have for insurance carriers as they search for insurtechs and other third-party suppliers of technology to solve a problem they're dealing with? You touched on the importance of analyzing speed and flexibility of their system implementation. What other criteria should carriers be sure to consider to ensure a mutually beneficial partnership?
That's a great question. And speed and agility is obviously one of the things that they should be looking for, getting that value of the vendor sooner rather than later. But more importantly, I think it's about identifying the specific problem the carrier wants to solve at that particular time. And what I mean by that is, let's say, a carrier has a roadmap of 10 items, right? Instead of going to try to find a solution that will solve all 10 items, find out which pain points of the 10 are the ones you want to go tackle right now, and then go find the best of breed for that specific pain point. Because, my grandpa used to always say, if you focus on 10 things, you'll be mediocre at 10 things, right? But if you focus on 2 things, you'll be great at one and really good at another. So, to me, I think carriers need to look at the overall roadmap and then cut that up and find the best of breed in each one of those value or problems that they're trying to solve. And if they do that, they're probably going to end up with more vendors to work with. But when you look at the overall experience that you're trying to accomplish and value you're trying to provide to the carrier, or the carrier's trying to gain, you'll find the best of breed in each one of the problem areas that you want to solve.
Well, thank you. And thank you all. And on behalf of Drake's Risk and Opportunity Forum, I'd like to thank our panelists, Sovin, Brent, and Jeff. Thank you all for your insights, and thanks to all the attendees for tuning in. And with that, I will turn it back over to Kevin.
Thanks,
Great.
Dusan.
Thank you, Dushan. Thank you so much for leading this panel. Brent, Sovin, Jeff, thank you for joining us today and sharing your insights and your experience with us all. Coming up at 10 minutes after the hour will be our final panel of the day on ESG sustainability and company responses to social issues. Again, something that's very topical and something that is occurring on a highly routine basis for many business leaders. We'll be back in about 4 or 5 minutes. Thank you.